Joining me now to talk stocks, sports, as well as AI is the former chairman and CEO of TD Ameritrade and chairman of the Athletics and executive advisor for the president at Coastal Carolina University, Joe Moglia, with us this morning. Joe, it's great to see you.
Good morning, Maria.
Hey, congratulations to you on all that you've done.
Thank you.
Fordham just named their football stadium after Joe Moglia, and I was proud to be there. Congrats.
Thank you very much for being there. That one, I think, because to me, it's a family thing.
Yeah.
And to have our name on the stadium at Fordham, that's the greatest honor I've ever received.
Oh, my God.
And I'm grateful for the fact that you made the effort to go.
That was awesome. All right, I want to ask you about AI. Big stories on AI today. Yeah. You've got Binance CEO stepping down, and now he's basically admitting that he helped Hamas fund their operation, money laundering at Binance. You've got AI on Sam Altman, who was fired on Friday from his role as the CEO of OpenAI. Now he's back at the helm. The move coming after immense pressure from investors as well as employees. The employees said, look, we're quitting. You get him back and fire the board. Otherwise, we're going with him to Microsoft. Before we get to the leadership issues at the company, I want you to get your take overall on AI because I've been raising concerns about the use of artificial intelligence for years now. I spoke to the co-founder of Sun Microsystems, an American computer engineer, Bill Joy, as part of my AI special back in 2019. Watch this. Do you believe AI is not being used today and it's going to be used in the future?
We don't have AIs that are general in the sense that they are multifaceted and can learn like smart people learn. And it's that second phase that will bring the danger. The first phase brings disruption socially, economically, because it is potentially so much more efficient. The second phase would be when the machines start to think for themselves. And if they essentially have children, if they replicate themselves, if they become a species, then we're coexisting with a species. And if one of us is essentially the marsupials, which got extincted by the placental mammals, then we have a competition. So we have to manage these technologies in such a way that we don't end up in a competition with them. This is probably a 25 to 50 year problem at this point, and Isaac Asimov and other people wrote about this, and he created his laws of robotics, to try to constrain the behavior of these robots. But the truth is, robots, like a bacteria attacked with an antibiotic, can develop resistance. We can program the robot with a law to protect us, but it can develop resistance to its programming and evolve away from the programming.
Pretty crazy stuff. I think we're in that second phase right now, Joe. Your thoughts on artificial intelligence?
Well, I think in general, Maria, there isn't any question that there are bad people in the world. There are bad actors in the world. And generative AI especially has the ability to be able to, fabricate all sorts of different things that could be bad for our country, bad for the world, bad for the economy, bad for global peace. So that exists. I recognize that. I think we all recognize that. And there are a lot of things out there where people can do bad things with. There's the other side of AI, though, and that is it can be by far the most significant, creative, productive thing we've ever had in the history of technology.
That's what it's being called, yeah.
Yeah. Now, when you go back to the internet, in the beginning with the internet, there were people that used the internet poorly. People were worried about the internet taking over all the jobs. On Wall Street, a trader on Wall Street had tremendous, the stock exchange, tremendous anxiety about the internet just taking over altogether. And the reality is, you've got to be able to adapt and adjust to the new technology that's coming. There are bad players that will take advantage of this, and we have to do our due diligence with regard to our cybersecurity, et cetera, to take advantage of that. But AI could also provide productivity the likes of which we've never seen.
I want to get your take on the macro story and on the markets today. We've had an incredible year for stock prices, even as the economy is slowing. A lot of expectations that these durable goods numbers today are going to be down, indicating a further slowdown in the economy. We're waiting on initial jobless claims and durable goods orders. Do we have those durable goods orders, Cheryl? Let's get to the numbers and get your reaction.
Maria, I want to point something out here. This durable goods number is much worse than expected. These are big ticket items, guys. This coming down negative 5.4%. This is the first negative read we've seen for this in over 3 months. Negative 5.4%. The estimate was negative 3.1%. This is a true economic indicator and something that markets are definitely going to look at. As far as core cap goods, I want to bring that to you because that's at 0.1%. down 0.1%. We're looking for a gain of 0.1%. So that's also another number that you want to watch. Real quick, I'll give you claims. Those came in a little bit weaker than expected. Tight labor market still out there. 209,000. Estimate was 226, coming off of that 3-month high we got last week on the initial claims. Continuing coming in weaker than expected as well. 1.84 million. Continuing, the estimate was 1.875 million, Maria. So again, these are that durable goods number, that headline, pretty rough. And by the way, ex-transports was in line at 0.1%, Maria. But rough economy out there. Back to you.
For sure. And we've been talking about an economy that is slowing. One of our guests last week actually predicted that we were going to see a horrible number this morning. And that is exactly what Cheryl is reporting. I'm with Joe Moglia this morning. And Joe, this market has not even really moved on this number, even as we see this much worse than expected durable goods number, down 5.4%. Explain that for us. What do you think is going on right now?
I think the durable goods number, Maria, is just one little simple data point. That's all it is. It's a data point. It's a bad data point, and it does suggest more weakness in the economy. I think what happened about, over a year ago now when the Fed started to tighten, people that maybe weren't as comfortable understanding what goes on in the market and the impact that the Fed has said, oh my God, things are going to slow down. But the reality is, when you first start to tighten rates, there's a lagging impact on that.
Yeah.
So what's happening today is a big part of what's been taking place over the span of the last year or so. So gradually, as the rates have gone up, the economy starts to slow. And that's exactly what the Fed actually wanted. So in a way, this can be painful in terms of the possibility of a recession, a slower economy, but it's also what the Fed objective is with regard to inflation.
Yeah.
Now, in the meantime, though, oil prices are still, while they're lower than what they were, they're still up.
They're elevated.
And I think middle America is still getting smacked around pretty good with this.
Yeah, and I mean, are you surprised that we haven't seen more of an impact from these 11 rate hikes? I mean, look, you just said it. There's a lag effect. But God, we're like talking about almost 2 years now in terms of when the Fed started its rate rising campaign. 11 rate hikes, and we're still talking about just corners of the economy getting hit. Yes, durable goods. Yes, housing. But consumers still pretty strong.
Yeah, I'm not surprised. And the reason why I'm not surprised, I'm sure you've never gone on a diet. I've gone on a lot of diets. Okay, so the issue is if I've got to lose 10 pounds, the first 10 pounds is easy. The last 10 pounds is very difficult. When you start, we're at 5.5%, 6%. We went to 3.5%, 4%, right? And so, but we're not where we need to get to yet. It takes time to get there.
Yeah, it's a good point.